up everybody, Nate here. And two of the largest cryptocurrency exchanges in the world, Binance and Coinbase, are now under investigation by the SEC for allegedly breaking regulations and misusing client funds. These allegations by the SEC bring up a lot of important questions regarding cryptocurrency as an investment and asset in the United States and across the entire world. Right after the allegations were made by the SEC, millions of dollars were essentially pulled from Coinbase and Binance, and the cryptocurrency market essentially plummeted as well, as many investors are now worried that another FTX-style collapse could be on the horizon. Regardless, the outcome of this case regarding cryptocurrency as an investment and asset in the United States is going to have a huge impact on the entire cryptocurrency market in general. So today I want to talk about what exactly is going on with Coinbase and Binance and how all of this is going to affect cryptocurrency in the future. So first, I want to go over the actual allegations that the SEC has against Coinbase and Binance. And one of the biggest reasons that the SEC is having problems with those two exchanges has to do with the classification of cryptocurrency as a security. The SEC has said that Coinbase in particular has made billions of dollars off of breaking regulations since 2019. And that's because a lot of the assets that it was selling and had on its site, well, it wasn't classifying them correctly. And that's because the SEC believes that they should have been classified as securities. And the exact same thing is happening with a similar set of coins on Binance. And that kind of brings up a big question: what exactly is a security? Now, the SEC and the federal government actually have a test to decide if something is considered an investment or an asset. And this is something called the Howey test. Basically, to be an investment or an asset in the United States, something has to possess four major qualities. It has to require some sort of investment of money. It has to be in a common enterprise. It has to have a reasonable expectation of profit, and it has to be derived from the effort of others. Now, for the longest time, people didn't really consider cryptocurrency to pass the Howey test. This is because it has to have all of these different attributes, and it can't just have one or two. Now, there are two major reasons why cryptocurrency wasn't really considered an asset or an investment up until this point. The first has to do with its actual name. Cryptocurrencies like Bitcoin especially were created to sort of subvert a lot of the traditional currencies that we have throughout the entire world. Obviously, the United States uses the dollar, and that is a government-backed currency, and pretty much every country around the world has a government-backed currency. But cryptocurrencies like Bitcoin are not government-backed, which means they are something completely separate from your traditional currencies. And again, Bitcoin was created to be spent, not necessarily as an investment as it is being used today. The other reason why cryptocurrencies have not really been considered a security is because people didn't really consider mining cryptocurrency the same as mining gold or buying a stock. When you buy a stock, it's a little bit different because you're working with a company that has employees, and based on the output and how that company is going to perform, the stock is going to go either up or down. But cryptocurrency is completely different because the value that is created is by an anonymous source, and you're not putting in actual physical work in order to create that coin. Everything is completely virtual. Not to mention, if you talk about the expectation of profit, well, it's completely up in the air whether or not you're going to make a profit from cryptocurrency at this point. Bitcoin came out in 2009, which means this market is still in its infancy, and we don't really know if it's going to continue to go up or go down completely to zero and be completely worthless. So the SEC doesn't really know how to classify it. Not to mention, because it's so new, there is a ton of volatility in the market. Like back in November 2021, Bitcoin in particular hit a record high of around $65,000 per coin, but then it dropped down to under $20,000 just a year later. That means there is an extreme amount of volatility in the market that is pretty unique to cryptocurrency. So it doesn't really pass the Howey test, but not every cryptocurrency is exactly the same, and there are a lot of advancements in the field right now. Cryptocurrencies in particular that the SEC is worried about and flagged with both Binance and Coinbase are a little bit different, and they are much closer to passing the Howey test. Their prices are a little bit more stable, and they have a little bit more application, and they're not really meant to be a currency around the world. So the SEC is looking at these coins and saying that Coinbase and Binance needed to classify them as securities because in their eyes, that's exactly what they are. Now, Bitcoin is completely safe here because they still don't consider Bitcoin technically under this entire umbrella, and that's not exactly what we're talking about here. But there are about 12 or 13 other assets listed on Coinbase Coinbase and Binance's website that the SEC does consider securities, and now they're going through a legal measure to try to force Binance and Coinbase to classify them on their website, and they're going to be looking at billions of dollars in retribution costs because they've had these assets listed for years. Now that is mainly affecting Coinbase and also affecting Binance, but Binance in particular also has some pretty serious issues as well. If you remember back in November 2022, the largest cryptocurrency exchange ever, FTX, essentially went bankrupt. We ended up finding out that Sam Bankman-Fried, the CEO, and a lot of other members in the company were using people's money and the assets as leverage and collateral to basically do whatever they want. So they were taking in money and they were taking in a lot of these investors' assets and they were selling them off, or they were not using the money like they should. They weren't really storing things properly, and eventually they weren't really making any money. Well, now the Binance CEO is going through the exact same thing because the SEC is alleging that he is using investor funds and assets to basically do whatever he wants, and instead of holding this money and keeping it, well, the company is actually using it to fund a lot of other projects and their own cryptocurrency ventures, which is a huge problem considering if cryptocurrency goes down, then that means the exchange is not going to have enough money to give everybody back their crypto. Now, what exactly does this all mean for the industry in general? When we talk about the allegations made by the SEC, well, these have some pretty serious implications because it's going to determine what exactly is a security in the cryptocurrency market and what isn't. This is not the first time that we have had this discussion in the cryptocurrency market, because even last year and years prior, the SEC has gone after Ripple and XRP, claiming that those assets are securities. There's obviously billions of dollars in that market, and there's still an ongoing dispute on whether or not XRP or Ripple are securities themselves. Basically, if these cryptocurrencies are considered securities, well, that means that all of these other exchanges like Kraken and Gemini that have these currencies listed, well, that means that they're going to have to repackage them and they're going to face a lot of regulation. Because cryptocurrency is a little bit different in how you buy and sell and hold it, well, that means there is a lot of other tax implications as well, because again, there's a lot of cryptocurrencies that are considered securities and some are not considered securities. So there's going to be a liability there from the US government depending on which one you're buying. Obviously, if you have a ton of different cryptocurrencies considered an asset or considered a security in the United States, well, a lot of cryptocurrency investors don't want that because that pretty much subverts the entire idea of cryptocurrency in the first place. It is completely anonymous. It is supposed to be separate from the government, but if you make it a government security, well, then that means that the SEC is going to be keeping an eye on it. A lot of cryptocurrency CEOs have also said that classifying cryptocurrencies as a security is going to hurt innovation and it's going to slow it down a lot, because now you're going to have to jump through a bunch of legal hoops if you want to create a cryptocurrency or if you want to sell one or list one on your website. And of course, the way you can sell cryptocurrency is going to be very, very different as well. Right now, if you want to take your Bitcoin off of an exchange and put it on your own cold storage wallet, well, you can do that. And technically speaking, at that point, you can do whatever you want with your Bitcoin or any other cryptocurrency, but you can't do that with something like a stock. You can't just sell it however you want to. It has to remain on the exchange. It has to be exchanged on the exchange. And I think the big reason why the SEC is pushing for this right now and to finally sort of eliminate the gray area between cryptocurrencies as a security and not a security is because the Federal Reserve is actually working on its own cryptocurrency and digital dollar right now. It would function on basically the same technology as cryptocurrency, and it would be a government-backed crypto. That could be something that investors could invest in, or it could be something that people use to buy things. The point here is that the US government has to have this nailed down before they actually release their own coin. Coinbase and Binance are pushing back against all of these allegations. It's important to mention here that they believe that these allegations are completely false and that they are not sort of cheating the system and avoiding regulations. They have said that they have been working within the regulations since they have been founded. So from their eyes, they have done everything that they are supposed to do. And of course, the most important thing here is that whether or not cryptocurrency is considered a security or whether or not it's not considered a security, well, you need to always do your own due diligence when investing in anything. I'm talking about buying a stock or buying gold, real estate, and especially cryptocurrencies. Cryptocurrencies are a very new market, which means there's going to be a lot of volatility. So always do your own due diligence and always do your own research and educate yourself on what you're buying before you actually buy try it. And whether it's me or anybody else on YouTube or online, never just listen to random people on the internet. Let me know your thoughts on this on the comments below. Do you think that Binance and Coinbase are in the wrong here and they should have been classifying a lot of these cryptocurrencies as securities, or are they in the right and a lot of these cryptocurrencies are not securities and regulation doesn't really cover them? If you're ready for more business and financial news, I've got you covered with another video right there, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.